Hello traders. Welcome to today's Pairs of the Day update. Let's dive into the latest movements and key factors influencing the gold, US dollar, and Japanese yen. The US dollar has been under scrutiny lately as market expectations for Federal Reserve rate cuts have surged. Currently, there's a 77% probability priced in for a September rate cut, up from 70% just last week. This sentiment shift is largely driven by the FOMC minutes, which highlighted easing price pressures and potential rate adjustments this year. Despite recent supportive economic data such as jobless claims and ISM services PMI, the USD weakened against major currencies, signaling investor anticipation of lower interest rate differentials. Turning to gold, the precious metal faced resistance around $2,385 per ounce amid recent market dynamics. A rebound in the US dollar and the People's Bank of China's decision to pause its gold purchasing program for a second month contributed to this pressure. However, gold remains sensitive to geopolitical tensions and political uncertainties, particularly in Europe and the Middle East. These factors may continue to support safe haven demand, potentially lifting gold prices despite temporary setbacks. Lastly, the Japanese yen has struggled to gain ground despite a weakening US dollar. Japanese officials find themselves limited in their ability to reverse this trend unless there's a significant shift in economic fundamentals. For sustained yen strength, weaker US growth data could be a catalyst, though any resulting impact might be short-lived unless it prompts market expectations of more aggressive Fed rate cuts. As we monitor these developments, it's clear that the yen's trajectory will hinge on broader economic indicators and central bank policies. Now, let's see what the technical analysis reveals. Let's take a look at the chart. We have opened the 4-hour chart of US dollar to Japanese yen. The price is currently trading below the 20-period moving average, indicating bearish momentum. The stochastic indicator is crossing lower in the middle, suggesting a potential decline. For support and resistance, we have identified 159.68 and 158.30 as support levels, and 161.95 and 163.29 as resistance levels. If the price continues to move lower, it could find support near 159.68 or potentially lower towards 158.30. On the upside, any corrective upward movement might encounter resistance around 161.95, with potential to test higher towards 163.29 and create new all-time highs if bullish momentum returns. Now, let's switch to the 4-hour chart of gold or XAU/USD. The price is currently trading above the 20-period moving average, indicating bullish sentiment. The stochastic indicator is moving higher inside the overbought area, suggesting strong bullish momentum. For support and resistance, we have identified 2,367.72 and 2,327.74 as support levels, and 2,411.37 and 2,449.26 as resistance levels. If the price remains steady, a breakout movement might be the potential trade strategy. Support around 2,367.72 or lower towards 2,327.74 could hold if the price corrects downward. Conversely, an upward movement towards resistance levels at 2,411.37 or higher towards 2,449.26 could signal a bullish continuation. Remember to always be aware of your risk management before you enter any positions. Okay, that's all for today. See you in the next video.